Mr. Thakkar joins us right now. Thank you so much for joining us. But today I'm going to start off with what everyone's talking about, and that is demonetization. How do the bets change on the Indian markets, at least in the short term?
Yeah, so basically, I am of this very strong view that anything which is to do with large use of black money, which is like real estate or home improvement, those kind of things, or say to some extent microfinance, will have some issues, and they will last longer. But at the same time, the opportunity in auto space, for example, Maruti, Hero, that, or for example, FMCG. Now, who is going to stop buying soaps and detergents just because black money is eroded? So I think going ahead, I would see, and in fact, there's been a good monsoon. 7th Pay Commission is there. Now government has started increasing MSP prices. Today they have increased MSP prices for wheat and various other things and rabi crops. So I think, and from 1st February, I think, strongly feel that it is going to be a rural India budget. Of course, infrastructure and defense will also be a larger part of the budget, but rural India is going to be the main theme, and I will, in this correction, I will strongly go ahead and recommend buying in everything which has to do with rural. For example, auto or pesticides or something like HUL, which is a basic necessity FMCG company.
Okay, you've answered all the questions which I haven't asked yet, but let me take them up one by one. One of the things that if you see the way in which harvesting takes place and how farmers work on that, generally it's the richer farmer, the local trader who buys out crops right after harvesting for most farmers, and they pay the farmer based on previous year's MSP. The difference that they get generally goes to the richer farmer, it goes to the trader who holds the stock. Much of the money right after harvest, which took place, unfortunately, right before demonetization in some parts, especially the rice crop, has already been paid out, and it's been paid out in 500 and 1,000 rupee notes. We know that 93% of Indian villages today are unbanked. There's no physical bank there. With about 86% of villagers today do not have any access to any bank. Now, my concern here is that that 500,000 rupee note that they hold today, because they've just sold their crop, they have to move back into a sort of a barter system, take credit from the local Mahajan, the local grocer. That could have a short-term impact on FMCG as well.
So I think it's a very, very short-term impact. And I think government is cognizant about all this, whatever you said. And in my view, the solutions will take place. And first, this is my strong view that post 1st February, you will see, government getting extremely focused on rural India. And these are all short-term things, and prices have adjusted to it. So I feel that this particular fall due to demonetization in something like FMCG or something like auto is a great buying opportunity. At the same time, I strongly believe that, for example, a home improvement space where most of the black money used to get parked, I think those kind of things will have longer term struggle, and those stock prices have also gone up significantly. So I'll stay away from that space while I'll be bullish on this space.
So within home improvement, let me take up home improvement for instance. Let's take something like paints. Is there a case to say that the rural recovery will kind of balance out the black money impact on paints?
So, see, stocks have corrected significantly, and these are very high quality stocks, whether it is Asian, Berger, Kansai, Nerolac. The stocks are great and they have corrected also significantly. But I would say that, structurally, little bit of growth will go away for them. But yes, after 30% correction, I cannot say that Asian Paints is a avoid at this stage. But I'll be more bullish on something like Maruti, Hero, or HUL, as I said.
I was reading a report that some part of the cash component that comes into rural income, at the end of the day, most of rural farm income is in cash, goes into two-wheeler space. Two-wheelers are bought. But you're saying that post 1st February, two-wheelers will improve.
No, I'm saying that post 1st February, government will take all the necessary steps which are required for upliftment of rural India. And because they also know that common man has suffered a lot of hardship in these days due to demonetization, and plus last 2 years were very bad for rural economy. So I think government will be very, very focused on rural India from 1st February, which is the budget day. So and that way I will say that this fall of say 13, 14, 15% in Maruti, Hero, or I think Lever has also corrected around 13, 14% from its top. I think, or pesticides, for example, something like Dhanuka and PI. Those companies, I think, so which are basic necessities of rural India. So those things will do very well in my view. And this fall is a good buying opportunity. Of course, you'll have to forget December quarter numbers and March quarter numbers also, because volume growth will be less. There'll be disappointments in the monthly volumes. But I think that is being priced in now.
So when do you see buying start to come in?
You mean in stocks?
Yeah, in stocks.
So, see, this is a convergence of two big negatives, right? One is strong dollar and other is demonetization, which and the effect of demonetization, which right now market perceives to be, the demand destruction. So, I think these two things have combined. It's a double whammy. But generally, in this kind of situations, only bottoms are made. When there is too much of pessimism, the bottoms are made. You remember in February, metal stocks, some of the stocks were trading below cash. Like MOIL, which I have discussed, or say at that time SBI and ICICI Bank, because March quarter numbers were going to be too bad. So generally this happens in market, and right now I think that is the situation. So I will not be very bullish on the market and go ahead and buy everything, but I will be very selective and rational in terms of selecting stocks.
Do you see big caps outperforming?
Yeah, because large caps have corrected significantly. For example, in IT also, IT has corrected big time. Now FMCG has corrected, paints have corrected, cement has corrected significantly now. So definitely there is a larger opportunity in large cap space. Of course, in mid caps, for example, pesticide space, I am very excited about because see, rabi crops prices going up. These are all good indications that government is going to be very liberal to rural India now. And I think so some of the opportunities are there in mid caps also, but largely I will be more focused on large caps now.
Large cap. And within the large cap space, you said auto. What is your view on cement? If real estate is affected, what happens to cement, for instance?
So that will be one very interesting space, because again there also prices have corrected significantly, and there are really good companies like Ultratech, Grasim, even Ambuja in that space. So that is again like paints, where we need to keep close watch on, because real estate, of course, housing is a large contributor to cement demand. Of course, infrastructure capex is going to significantly increase from here on, but you have to be paying attention to what happens to housing when you buy cement. So there again prices have corrected, so I will not be negative at these prices, but I'll be a lot more positive on something like Maruti, Hero, or HUL at this point of time.
Okay, so you have very clearly identified 3 stocks, and you've identified PI Industries, you've identified Dhanuka. You're being very, very stock specific and a very narrow basket right now. But I just want to get a sense from you, for our viewers who hold things, not necessarily what you hold. In housing, there is a view that real estate prices will tend to correct, and therefore it will become a little bit more affordable for people. Do you think that the price correction and the increase in volumes, which way will it tilt? Increase in volumes will outdo price correction, or price correction outdo increase in volumes?
No, first there should be price correction, right? So in my view, something like LIC housing in that space, if it falls, I think looks interesting, because mostly their book is like government officials, and it is a retail lending. On one hand, they'll benefit from lower bond yields, because they can buy from debt market at a lower rate, and the book will be safe because it will be mostly government officials and a retail book. So it is not a real estate developer book or something like that. So I think LIC Housing Finance looks interesting in that space, and because with all other NBFCs, it is
words
also
very
corrected.
carefully. You're saying interesting. You're not saying at this moment that this is a buy. You're saying you're going to look at it right now. Is that a fair thing to say?
So no. So my point is that if it falls in line with other NBFCs and because of the linkage towards housing sector, then it becomes very interesting buying opportunity.
You know, we've been hearing from people like you that NBFCs are way overpriced, and we're seeing this savage correction right now. Like, let's look at something like a gold finance companies, Manappuram, partly Muthoot. They've had savage correction. Despite that, almost all their correction has actually come just after this demonetization. Is it overdone? Is the correction overdone, or is there still more to go?
So we don't have coverage on Muthoot and Manappuram, so I'd not like to comment on those two gold finance companies. But overall, if you see, I think, wherever money is landed to a person who is dependent on cash, and there it is not, there it is a risk, right? Because his cash flows are affected, so you'll have to take NPA's hit. So that is slightly more worrying than something like Maruti or Hero, which has already recovered his money. Now it is just a question of 2 or 3 months of volumes going down. It is not a cash flow issue. So that is my view.
In terms of overall SME space, some of them listed, some of them unlisted, but there is a cascading effect. Do you see that, do you feel that there is a cash component, informal component there? Not black, but cash transactions are a crucial part of it. And there is a danger that there could be some kind of debt stress there. I'm not saying NPA, but at least some stress?
Yes, definitely. Definitely.
Is there any specific
and
area?
I'm worried about that part.
What happens to banks? Are there any specific banks which are more SME exposed, which you would like to avoid or sell if people have them in their portfolio?
No, I would not like. Within banks, I think generally it should not be a problem. It might be a slight stress increasing in the SME book for some of the banks, but that's okay. I think it's a larger issue for NBFCs, definitely.
In terms of the loan book, a lot of people are saying that the deposit growth and increase in CASA ratio, obviously a lot of it will not necessarily stay in CASA. Banks, the cost of funds for banks go down. But if there is no significant credit growth, then even that is a liability. You might still be paying 4% on a savings account, but you don't really want that money because there's no one taking loans. But do you think that they will be pushing out more loans, corporates will be getting cheaper loans, they won't have to depend on bonds and things like that?
I think interest rates are on the downward journey for sure, no doubt about it. Food inflation is also going down, we have seen it, and a lot of liquidity in the system which will generally bring. So in my view, interest rates are headed downwards for sure. But you are right in saying that, and let us see how it happens. How much of the money stays with banks, that is also one question. So I think I'll monitor it very closely. Let's see what happens.
You said that consumption is not going to stop, but you do agree that in the short run, we'll see, maybe 2 quarters, we'll see a slightly lower volumes. Do you think that's going to happen?
Yes, definitely. So what the recovery which started in auto, or which even I was expecting in Q4 in FMCG, will get shifted to next year. That's what I feel right now. But from the stock prices perspective, it has already factored in that, in my view.
Okay, that's I think the crucial message that you're giving to our viewers, that the stocks have already priced in the discount. Okay, I just want to look at a slightly more political economy oriented sense from you. I want to get a sense. You're already saying that you believe that 1st of February, this is going to be a farmer oriented, rural oriented budget. Do you see that the government is going to increase its fiscal deficit?
No, I think, tax to GDP ratio anyway is going to go down with the clampdown on black money. Plus oil prices is in our favor. Oil is at 45, 46
tax to GDP ratio will go down.
No, tax to GDP ratio will go up.
Yeah.
Will go up. Yeah. Because black money economy you are transferring to official economy. So definitely in longer term, tax to GDP is going to improve. And most importantly, oil prices are still below 50. So things are in our favor in terms of fiscal deficit. So there's a lot of leg room for government next year at least to go ahead and spend on rural activities like irrigation and all that, and plus rural infrastructure. Anyway, roads are getting built, so electrification of rural India. So I think a lot of things they can do now. There was a huge leg room, and now they'll do definitely.
So would you buy any of the capital goods stocks? You're saying that there's going to be rural electrification. Part of it is transmission, but is generation already done? Would you buy anyone which produces machinery for generation companies?
So I'm not too sure about generation, but transmission, of course, we have been recommending KEC and Kalpataru kind of stocks who do a lot of work for power grid and SEBs for transmission. So that particular space continues to look good.
Okay, what about, do you cover Jain irrigation?
I'm sorry, we don't cover that stock.
Don't cover Jain irrigation. In terms of, there is some people have been saying that perhaps this government will bring in a universal basic minimum income plan, that there will be some sort of a dole coming out now, which will go through the direct benefit transfer. Are you one of those people who believe that this could happen?
Yeah, I would say so. Because, see, government has also come to know that, apart from their larger purpose, which was to convert black money into a white economy and official economy where everything is taxed. Apart from that larger purpose, there has been a lot of hardship to common men, and I think definitely common men will get rewarded from this budget onwards, and especially rural India.
Mr. Thakkar, let me just take the global picture a little bit. You had said that this is a double whammy. There has been demonetization, and there's also bond yields going up in the US, Trump coming back, talking about protectionism. But the companies which are exposed to the US market, IT or pharma, what is your take on them?
So I feel that definitely IT is a great value buying opportunity. But of course, again, there are no short-term gains over there. Numbers are going to be very muted in Q3 also. But valuations have also, and for such high quality companies which generate 15,000 crore, 20,000 crore cash flows, free cash flows, for them to trade at 12, 11, 13 times, it's a great value because the growth is looking very difficult, at least for this year. So I would say that, IT is a good value buy, but you will have to keep patience. Pharma, of course, has become absolutely volatile now, because of this US clampdown on the prices. It has become very, very volatile. But I think Sun Pharma is, again, at a good valuation in that space.
In terms of the rupee dollar, the exchange rate, what is your sense? Is the rupee going to weaken over the next couple of quarters?
See, it is like this that, after Trump has come, there has been a great expectation that inflation will inch up in US and Fed rate hikes will be sooner and faster. And that's why we have seen great spike in bond yields from 1.7% to 2.2%. And dollar index strengthening to near 100 levels. But let's see, I think we don't know how Trump is going to formalize his policies. So we'll have to keep close watch on that. It's not that it is only going to appreciate from here on, and so you have to trade that way. I think it is not yet clear. And plus you have to also remember that from Indian perspective, if oil remains below 50, if tax collections are going to improve, then definitely rupee will outperform other currencies. Of course, when dollar is appreciating so much, you will also depreciate, but you will not depreciate like other countries, which are commodity dependent, like oil dependent.
One final question, Mr. Thakkar. In case, a lot of people were sitting on their money, waiting for the markets to correct. It has corrected, if you look at it, from last year's 9100 odd to now 8100. What would your advice be to them? Should they wait a little bit more, or should they start investing like right now?
They should start investing for sure, in my view, because see all the large caps which which we used to love, like Maruti, Asian Paints, Ultratech, all those have corrected now. Now you have to take a call that you will have to wait till February. Till February you can have 5% downtick also if you buy today. But I think from then onwards, India is really headed towards a good growth, and so all the good proxies of India recovery story should be bought.
All right, Parag Thakkar, thank you so much for joining us. Pleasure talking to you. Thanks a lot.